Excellent. Good morning then, and just keep your eye on crude, which is making new lows as I speak. So this is you can see on the chart on the bottom right here, and let me just enlarge that. So it's all about the oil space today. We just dropped 50 ticks through the low here. Just looks like we're going to test the $72 handle. It's the OPEC meeting. It's the meeting everyone's been waiting for weeks, and obviously headline risk with sideline OPEC nation meetings through the last couple of days has led us to believe, and here we go, testing $72 now, guys. $72 being tested. This is the lowest price crude's traded for over 4 years, and this is further pricing in of the idea that OPEC are not going to cut production at today's meeting. This has been the takeaway from the headlines out of these sideline meetings, particularly the big drop that we had on Tuesday afternoon when Saudi Arabia, Mexico, Russia and Venezuela met, and the headlines coming out of that meeting after it. That was the first sort of clear sign that ultimately we're not going to get a cut, and that OPEC and the nations within OPEC are happy to wear the pain of low price for the time being. What their motivations are, just breaking $72. What their motivations are is, well, we don't know, but it's perhaps it's political, perhaps it's all about trying to squeeze out the US shale gas revolution and trying to win back market share. Who knows? But the point is, the noises we've heard indicate no cut. The OPEC meeting is today, and this is being priced in aggressively. I would say if we do get no cut, I'd say oil remains under pressure, and we test $70 at some point. Not today. Well, maybe. We're only 200 ticks away. Maybe not today, but I would say the big event today, if there were to be a big event, and it would be a huge event, is if actually OPEC cut production against what we've kind of been led to believe. So as it stands, oil down through $72. I'm short on the break of this. Quite a great example of a breakout trade. Whether we're going to stabilise below $72 remains to be seen. I'd want to stay short as long as oil stays below $72, with the idea that we can extend down to test, well, 71.50. It's hard. I mean, on levels, let's have a look on the weekly chart. If this will load up for me. Actually, let's look on the monthly chart. Sorry, let me just get this loaded up. Here's the monthly chart, and you can see in terms of technical levels, it's tough to pick any out because it's so long ago we were trading at these prices. There's an obvious bottom in 2010, so the 2010 low is, but that's not until 67.15. And you could see there were some lows in around August that year that were around about $70. I mean, really $70, the round handle is the price that everybody's now looking at. And that's why I say that. I mean, I don't have the line on the chart, but let me just put it on there. $70 wouldn't be a bad shout in terms of a destination. But so all eyes in Vienna, where the OPEC meeting is taking place. It is underway already. It's hard to know on timing, just in terms of when we might get an official outcome. But suffice to say that as it stands, and let me just tell you the quote from the Saudi oil minister Al-Naimi said, "The Persian Gulf countries have reached a consensus on output and will take a unified position." But then he didn't elaborate what the consensus on output was. He didn't say whether that consensus was for no cut or whether it is for a cut. But given the noises we've heard over the last couple of days, it's almost certain it's going to be no cut, and it would be a massive surprise if they cut. And if they cut, it would lead to an extraordinary move to the upside in crude oil. Several handles. Obviously, it would depend on how large the cut would be. If they cut by 500,000 barrels a day, then you could easily see a lift in crude of $3-4. If it's 1 million barrels a day cut, well, I don't know. Pick a number. $5 move to the upside, maybe. It could be that sensational because it's that unlikely. So that's oil, and let's just move that chart back down. Everyone's eyes on that market, of course, as we go through the session. Now it is Thanksgiving, so happy Thanksgiving to those of you who are from the US. It does mean that this afternoon's session is going to be very, very slow. And what a day to have Thanksgiving, because the NYMEX pit is closed today. So there's actually no pit trading in NYMEX crude oil today because of Thanksgiving. I mean, they couldn't. Maybe OPEC times their meeting on Thanksgiving on purpose. But volumes will be low. So, I mean, it does mean if the unexpected were to happen and there was a cut in production, because the pit is closed, volumes are going to be very low. And so that would just exacerbate the move and make it even more radical. So it's going to be potential. Well, no, it's probably going to be a non-event because OPEC will say we're not cutting and it's already priced in. But you never know. We'll cross our fingers and hope for the unexpected. So let's talk about equities and two stats for you. I mean, if you're thinking umming and ahhing, look, equities. Look at the top two charts. S&P all-time highs again yesterday. DAX. Not quite all-time highs, but not far off it. 10,056 was the all-time high back earlier in the year. So here are two stats for you. The DAX is up 10 days in a row, and it hasn't had a 10-day gain of this magnitude since 2001. So the DAX is up over 7% in the last 10 sessions. Biggest 10-day gain since 2001. For the my S&P stat is that this year, the S&P has made an all-time closing high 46 times. In the calendar year of 2014, we've had 46 all-time closing highs. Now, the thing about that is we are now one short of the record set in 1998 and, let me just get this right, 98 and 87. So in 1998 and in 1987, the two big bull market years, we had 47 record ever closing highs. So the S&P's still got 27 sessions to notch two more closing ever highs to take the record. Okay, so, and there's an article in the FT, and we're going to send it out to you today on valuations and, is the S&P overvalued here on historic measures? And the problem is you can use so many different valuation methods that some valuation methods suggest that stocks are way overvalued, whereas others actually see them still as modest fair value when you're looking through the lens of a bond trader and when you're considering yields. Well, then actually from a yield point of view, one third of the S&P 500 companies has a dividend yield higher than the US 10-year government bond yield. And that's Will saying because T-notes need to sell off, and he's right. But just imagine that one third of the 500 companies in the S&P pay dividends to their shareholders, resulting in a dividend yield higher than the 10-year US bond. Quite remarkable, and this is why people are still buying stocks, even though they're on some measures very high valuations. They're still buying stocks because they need some yield, and the bond space just ain't giving it to them. Now, talking about the bond space and flicking to Europe instead of the US, we kind of got a similar problem. Yesterday's Bund auction, yield at 0.74%, I think it was, record low. Germany borrowing money for 10 years at a record ever low rate, 0.74% yield on an annual basis for 10 years. This is why there isn't any yield. This is why people are happy to buy stocks despite these high valuations. But there is one outlier, and here's a great chart I saw in the FT this morning. This is Eurozone 10-year government bond yields performance over the last, in the calendar year of 2014. So this is Greece, Spain, Italy, Germany. If you rebase these to the start of the year and how have their yields changed since the beginning of the year, then it's quite a remarkable divergence we've got here, as pretty much everybody's bond yields have been driven lower in the Eurozone as a result of the anticipation of QE, as a result of the deflation risk. This is depressing long-term bond yields dramatically. Not only as Germany borrows